With even Bank of America predicting the U.S. economy will face a period of hyperinflation due to a major spike in commodity prices, the prospect of a stagflationary blow-up just as seen in the 70s is worrying economists that sooner rather than later we will see the housing market boom turn into an epic bust. Building material prices have been skyrocketing, and on the other hand, the U.S. housing inventory is still at a record low level. The market imbalances have never ceased to get worse, and bubble deniers are having a hard time explaining why the steep price increases are somehow justifiable. In a recent article, experts with ZeroHedge argued that the home price surge can be mainly attributed to the trillion-dollar government response to the current recession. In addition to record low mortgage rates and a mass exodus away from major urban areas. Redfin recently divulged a market update revealing that, in May, median home sale prices rose to an all-time high of 18%, with 58% of all houses selling within 2 weeks of listing, and that's also a record. In face of this grim, hyperinflationary landscape, one of the few hopes that was still standing for those whose incomes did not similarly hyperinflate and who were at risk of becoming unable to afford a roof above their head was the fact that rent prices have been allegedly tumbling in recent months. According to the U.S. Bureau of Labor Statistics' monthly Consumer Price Index metric, rent inflation had just declined to the lowest in a decade, below 2% year-on-year. However, the ZeroHedge experts wrote that, due to the way the Consumer Price Index basket is weighted, it acted as a key anchor on overall Consumer Price Index rates and served to distort the broader inflationary picture. In short, the Fed would look at the relatively tame core CPI, which was only tame thanks to tumbling rents, and would conclude that there is nothing to worry about. The truth is that the official data does not represent what the market has been actually going through at the moment. Instead, as several economists suggested, the official numbers have been reflecting the government's narrative that inflation is low and contained. But what politicians and policymakers fail to expose to the people can see it for themselves, and they can feel it right in their wallets as rent prices have actually started to soar. In the article, the experts disclose that American Homes for Rent, which owns 54,000 houses, increased rents by 11% on vacant properties in the month of April. The company even reported in a statement that it did so as it, quote, continued to experience record demand, with the same home portfolio average occupied days percentage of 97.3% in the first quarter of 2021, while achieving 10% rental rate growth on new leases, which accelerated further in April to an average occupied days percentage in the high 97% range, while achieving over 11% rental rate growth on new leases, unquote. Invitation Homes, the largest landlord in the industry, also raised rental prices by a similar amount, according to one of the company's executives on a recent conference call. A couple of days ago, Bloomberg also warned that record occupancy rates are emboldening single-family landlords to hike rents aggressively, testing the limits of booming demand for suburban rentals. So, while the housing price bubble has continuously expanded over the past year, and as a result it significantly worsened the affordability crisis, putting home ownership out of reach for most Americans. On the flip side, rents remained flat for most of that time. Therefore, the new increases may add to concerns about inflation pressures, as Bloomberg so eloquently puts it. Companies are trying to figure out how hard they can push before they start losing people, said Jeffrey Langbaum, an analyst at Bloomberg Intelligence. And they seem to be of the opinion they can push as far as they want. Apparently, those companies were right because the nationwide rental price increase from April to May marked the largest single-month increase ever recorded, according to the June Apartment List National Rent Report, which goes all the way back to January 2017, with the National Rent Index jumping 2.3%. The report also highlighted that it was the third straight month in which that record has been broken, following a 2% increase last month and a 1.4% increase in March. In fact, in March, prices have returned to their pre-health crisis levels. But in May, we've hit an unprecedented level, as our national index has surpassed a level where economists projected it would have been if the health crisis-related price declines of 2020 had never happened. That is to say, as the housing price bubble doesn't have much more room to keep growing, the effects of the market's woes are spilling over the rental market, a clear sign of the unsuitability of the current pace of home price appreciation. And of course, a major red alert that a notable real estate price correction is looming. To prove so, here in this chart where Apartment List displays the national median rent from 2018 up until now, we can see how the data for 2018 and 2019 illustrates the smooth seasonality of a normal year in which prices peak during the summer season and slightly drop in the winter season. In 2018, prices increased by 2.9%. In 2019, they rose 2.1%. In 2020, however, we had an evident break from this trend, with rents dwindling in the early months of the health crisis during what is typically peak season. Now, the dashed line in this chart is a projection of how rents would have changed over the past year in the absence of the crisis, and it's based on an average of the growth rates that were observed in 2018 and 2019. Although rent growth had been consistent with this projection since the start of the crisis, May's record growth has put actual rents ahead of the projection. After the latest spike, annual rent growth now stands at 5.4% nationally. Of course, there are remarkable variations in regional rent trends and prices. In some places, rental prices haven't exceeded pre-health crisis levels just yet, but that doesn't mean prices remained low. For instance, in San Francisco, from March 2020 through January 2021, rents fell a staggering 26.6%. However, since January, San Francisco's rent prices have surged by 13.4%. Now, although rents in San Francisco metro areas are still 16.8% below pre-outbreak levels, the market has clearly turned a corner, and the best deals appear to be behind us, as the experts noted. The same trend is now spreading across the country, even in markets where rents had been falling the fastest. The article outlines that 9 of the 10 cities with the sharpest year-over-year rent declines have now experienced positive rent growth for 4 consecutive months. Amongst those cities, San Jose, Washington, D.C., Boston, Minneapolis have seen rents soaring for 5 consecutive months. In this chart, we can observe the month-over-month rent growth from 2018 until now for 6 of the cities that have been hit hardest by the effects of the health crisis. Now, as this AL report outlined, in each of the 6 cities shown, the fastest single-month rent increase has taken place in 2021. Rents are still below pre-outbreak levels in each of these cities, but they're quickly catching up. Boston has seen the most notable price increase, having soared 3.4% per month in 2021. And if that upward trend continues, Boston rents will climb above March 2020 levels by midsummer. And considering that those sharp increases are being recorded in traditional coastal markets. When analyzing mid-sized markets, the numbers revealed the real rental market frenzy. In cities where rents have been growing the fastest, prices continue to boom. One of the most evident examples is the rental market of Boise, Idaho, where the average rent has soared by a shocking 31% in the past year. The AL report underscored that Boise is leading the list, with rents growing by an alarming 6.6% over just the past month, the fastest month-over-month growth rate among the nation's 100 largest cities, and also the fastest year-over-year growth. But in pretty much every city where rent prices have been soaring since the sanitary outbreak struck here in America, rent growth rates continued to surge in the month of May, and data shows that many of these markets have been experiencing considerable price increases way prior to the outbreak. From January 2017 to January 2020, rents in Mesa, Arizona surged by 25.5%, the fastest growth in the nation over that period. Fresno was in third place for fastest rent growth from 2017 to 2020, while Chandler, Arizona was in sixth place. This means that in those markets, the effects of the outbreak did not create a new price trend so much as it has accelerated an existing one. But that contrasts to what has occurred across all the other mentioned markets, for which the rent hikes registered in May were a complete aberration. Taking this context into consideration, as well as the ongoing upward trajectory in rent trends, it seems that in Boise and in cities like it, rental price increases have yet to reach their peaks, which means the worst is yet to come. The Apartment List report concludes by describing that the government response and CDC orders have created some truly transitory softness in the rental market last year as people relocated to rural areas, and city landlords were willing to concede several benefits in an attempt to find new tenants. But as a consequence, 2021 has seen some of the fastest rent growth they've ever recorded, with rents nationwide having now surpassed the level where they would have been if rent growth had not been disrupted by the crisis. Meanwhile, rental inventory across the nation remains tight, and the experts forecast that as vaccine distribution continues to gain momentum, we may be seeing even higher prices as a result of released pent-up demand from renters who had been delaying moves due to the sanitary outbreak. Whereas last year's peak moving season was halted by the outbreak, this year's seasonal spike appears to be making up for lost time, they wrote. In simple words, surging rents were the missing piece needed to prove how extremely unbalanced is the current housing market, to the point of reverberating the effects of the home price bubble into a market that, for the most part, remained untouched by the health crisis. And as inflation grows across more and more sectors, the experts say we're about to see some truly epic numbers in the coming weeks. With Americans struggling increasingly more to either buy or rent a home, bubble deniers may overlook the risks as much as they'd like, but the evidence is all there. Neither can the companies keep increasing rental prices forever, nor the housing market frenzy can go on for much longer. Otherwise, millions upon millions will have nowhere to live in. It's unquestionably unsustainable. Prices have to face a reckoning, and the more inflation pressures mount, the more obvious it gets that a housing market crash is gonna happen. Whether the bubble will burst unexpectedly or prices will continue to grow until the market reaches a point of complete breakdown, only time will tell. But week after week, we present you with more proof that things simply cannot stay as they're right now for much longer. So don't fall for those rosy forecasts, as it is much better to be prepared to handle the ugly truth.